Hey, welcome to the 40 Finance channel, everybody. Today I've got a very interesting list of 25 high conviction stock plays for 2025 as released by the investing firm UBS. But really, what's the most interesting is what's not on there, right? So there's a lot of chatter about like AMD right now being undervalued. Obviously, you have hot stocks with Google and some of the other NVIDIAs and big tech companies. Those are really not on there. So to be clear, this has nothing to do with me. This is more of a sort of food for thought exercise. Get you some new stock ideas to maybe research on your own. Before we start, as always, we'll be using Seeking Alpha for our stock research today. If you are interested in learning more about this awesome stock research platform, my affiliate links in the description. Potentially support my channel and save big on your first year. All right, so I am going to go through the list. They are in alphabetical order, but I want to call something out, which is actually pretty cool by UBS. We focused on stocks where we believe our analysts have a differentiated view versus consensus, and where we have interesting or proprietary data sources. So to be clear, I said there's no AMD and whatnot in here, but they were trying to take a different angle with this particular list that they put out. And I can appreciate that because sometimes, everyone has the same ideas as far as, what's coming up in the future. So they tried to do it differently. Now, here's the list, top to bottom. Again, this is alphabetical order. They don't really give a weighting to which ones they like best, but they, just pick their 25 stocks. 3M, Alaska Air, Amazon, American Tower, Amphenol Corporation, Aritzia. I'm not familiar with that, but that is over-the-counter stock. CenterPoint Energy, Cognex, Comfort Systems, ConocoPhillips, CyberArk Software, Dell, Elevance Health, Energy Transfer, First Citizens Bankshares, First Solar, Keurig Dr. Pepper, Legend Biotech, MasterCard, Oracle, Reinsurance Group of America, S&P Global, Sarepta Therapeutics, Texas Instruments, and Ulta Beauty. Now I'm going to pick off 5 or 6 of these here to dig in, and I'll start right at the top of the list here with 3M. So I was super shocked that someone would pick 3M, but to be fair, on a year-to-date chart, they are up 16% this year, and I forget, they gave a price target for 3M of 184. So I'll come back over here. Today's price is 127. So they got about 57 some odd dollars they say is left in 3M before the end of next year. And quite honestly, I don't see it in the metrics right now. Okay, so if we go to revenue growth year over year in Seeking Alpha, 3M has grown 22%, which is awesome. Now, looking ahead, though, you're talking about minus 10% revenue growth. So it's hard for me to really see this one, to be honest with you. This fiscal period ending on December 24th, the EPS estimate is $7.29. Year-over-year growth, so from 2023 to 2024, they've lost 20%. And then next year, single digits, forward PE of 15. On the revenue side, all I can figure is they're projecting a bounce back, back to par kind of situation. Because this fiscal period, you're on pace to be down 27% in revenue. Next year, projected is 3% up. So, net loss of minus 24 between these 2 years, there's just not a lot in the projections. And if I look at the general ratings for 3M, nothing on the quant score. They've got a hold. The F for growth, which I called out. When I look at Seeking Alpha analyst, there's really no one on the site. One person has a buy. Now, if we go to Wall Street, last 90 days, so this is stretched out pretty far, you do have 8 strong buys in Wall Street. okay, with a price target of high of 184, average of 146, low of 89. So that's 3M. I'm not feeling it as stock of the year next year, but might be something for you to look at. All right, next up we got Alaska Air. Actually, I'm covering these first three. Alaska Air currently at $64. Price target here is 81. And I don't know a ton about the airline industry, the business operations of an airline industry, but the big thing with the industry as a whole right now is the valuations are down from their normal averages, and I've seen that on a couple of news stories and on TV as well. The big news with Alaska Airlines is they are merging with Hawaiian Airlines, and they're supposed to upgrade their fleet. If we look at earnings estimates, this year's 2024, they're supposed to come in at 433, which is minus 4% year over year. But there is a pretty significant 12 analysts calling for 587 EPS next year, 35% growth. And then in 2025, revenue estimates are big too. So I can definitely see, statistically why, or I should say projections wise, why this one would be appealing to someone. On the quant score for Seeking Alpha, you got to buy. Analysts, there's not a lot of coverage, honestly. 2 people. And then on the Wall Street side, you got 9 strong buys, 5 buys, 2 holds. So Alaska Airlines, if you're into the airline industry, that might be worth checking out. All right, next up is Amazon, 224 today. They're calling 264. There's a handful of people I've seen that are pretty bullish on Amazon right now. I do think Amazon's very easy to get behind in the long term, just because of the progress they've made and just the monster accounts that they're holding on the cloud centers and data centers, and that world's just going to grow. They did a great job of building that company, and that growth might be coming down a little bit, the growth pace, but they're so locked in. So let's check out sort of their growth story, if you will. December 2024, they're going to finish, give or take, at $5.13 for earnings. Huge growth, 76% growth. But that's already projected, right? So next year is where people are going to start seeing where does it go from there. And you got 20%, which is great. That's awesome year over year growth for an EPS, but it is slowing substantially. It's less than half the pace of 2024. So I'm not sure how, if that's going to be enough to get them, get their price up to that target. Now, revenue-wise, pretty consistent. And you've got between this year and looking out, you're talking about a three-peat of double-digit revenue growth with a company that's, making $637 billion right now. So that's great. So I can definitely see Amazon making gains as a stock. What was it? 264. So 264 is, I guess that's not too bad. That's less than a 20% gain. So Amazon for a 20% gain in stock price next year, that's probably realistic in my opinion if the chips keep falling their way. All right, scrolling down the list a little bit, the next one I picked was Dell, just because it really surprised me that this would be on the list. You got a price of 112, you got a target of 158. And if we look at Dell, so this year, first of all, they're up 52% this year. Okay, so they've made significant jump just in 1 year. And historically, these companies that sell hardware have a huge swing. They're basically waiting for the next cycle of upgrades to come in. And I don't know that we're at that place right now from what I've read on Dell. But let's take a look. Fiscal year ends Jan of 2025. This year coming in at $782. Next year projected $9.40. That is 20% growth on the EPS side. So things are better than I thought. Revenue, though, it doesn't matter. Next 3 years combined, you're sub double digits. The price target here, what was it again? 158. So the price target is, I don't know, about 40%, something like that, jump from today. I don't know if I really see that in the numbers we just looked at. Quant ratings got a hold. Analysts, you got 10 people with buys in the last 30 days, 4 strong buys. That's seeking alpha authors. Wall Street analysts, they're riding right into it. 14 strong buys, 7 buys. So to me, I'm not sure that it's necessarily there. It could very well be I'm missing something in the news stories of what's to come 2 to 3 years out, but I don't see it fundamentally right now with Dell. All right, next one that kind of jumped out to me, First Solar. This is probably one of their biggest calls because it's 178 today, price target of 360. So basically double up, right? And from a company like UBS, I mean, it's different if I'm sitting here saying double up, from my basement. A company like UBS calling a double up is pretty significant, particularly when you think about solar in general and how it's kind of been up and down, and now there's a little more swing towards other renewable energy sources. But what I will say is in the bag for First Solar is that they're an American company, and we know that when Trump comes in and you start talking about tariffs and you start talking about a lot of these other solar panels, they come from China. Okay, a lot of them. And so if there is a tariff, if there is relation problems with China, I'm sure that's good for First Solar in general. The question is the solar market, okay? Because that's what's been getting weaker. And there's just slightly less incentives now than there were, 3-ish years ago. You can't sell a bunch of stuff back to the grid in certain places. So the consumer proposition has gotten tighter. Will the pressure on the Chinese solar companies bring First Solar an advantage? Quite possibly. Let's see, though, if that's a double up advantage in terms of projections. All right, well, good sign right off the bat. EPS of 1324 this year, if it lands, is plus 64%. And I'm very surprised to see this over the next 2 years. I mean, you got plus 58% and plus 40% projected. Those are strong numbers. Looking at sales, you got about plus 28% this year when the year is over, and another 30% projected, and that's 39 analysts. I mean, it's not just like one person saying that. Very, very interesting. Let's check the ratings on Quant Rating. You got good valuation, but overall hold. Seeking analyst rating, 6 buys, 1 strong buy. Wall Street analyst, 13 buys, 19 strong buys. So Wall Street's all over it. Price targets, high of 360, average of 270, low of 190. But, whether or not it gets to UBS's 360, I will say that this is pretty intriguing based on those growth rates. All right, let's pick one more here at the bottom. This I thought was interesting because you just never see anyone talk about it. Texas Instruments, 185 today, price target of 250. Okay, so that's a pretty hefty, call it 25, 30% jump from where we are today. Let's see what the consensus is saying about it. This year, you're actually down EPS wise minus 26% year over year. So this must be a comeback story. Forward PE, by the way, of 35, for basically a chip maker. Next year, they could hit 607. That'd be plus 17% year over year, but you're still like, whatever. You're still net 11% down over 2 years. Then on the earnings side, or excuse me, the revenue side, this year is going to be a loss year over year. And then next year's it's double digits, but it's 10.79% and then 13. I mean, I will say, if I highlight these numbers here, you've got 4 years coming up of double digit growth, which is definitely good. This valuation seems weak in a bad way to me. If we go to forward PE gap of 36, yeah, you know, 26 is the 5 year average, and you're at 36. So not only do you have a stretch for Texas Instruments to climb even today to 250, but you could make the argument that if the price went down farther than it is today, you would still be about fairly valued, so to speak. All right, so that's 25 high conviction stock picks from UBS. We went in depth a little bit more on 6 or 7 of them. Let me know what you think in the comments. It's a very interesting list. And again, to give UBS credit, they said this was a different list, that they were trying to, go outside the box a little bit. So I really do appreciate that. And if you liked anything of what you saw there on the Seeking Alpha platform that I used on the screen today, check out my affiliate link in the description for a discount and free trial. Potentially support my channel as well. I hope everybody's doing well. We'll see you on the next video.